Everyone, my name is Stephen Stewart, CEO of Orefinders Resources, and very happy to deliver an update and another webinar on Orefinders and what's been going on. It is April 2020. It is an interesting time. I won't get into the macro details. Everybody knows what's going on, but we wanted to focus in on two things. One is we did a significant financing with Mr. Sprott, Mr. Eric Sprott, that is, and his group. That brought in $2 million for our treasury, which is absolutely critical. The timing was phenomenal. We're well cashed up to execute in our plans. Who knows what the future brings in terms of financing for juniors, so for the juniors to have cash is absolutely critical. And I thought it was a good opportunity to refresh all existing shareholders, but also new eyeballs that are on our story about what exactly Orefinders is. So this is the story of Orefinders, and stay tuned. There's lots to absorb, but you can always press pause and come back at another time. So this is the forward-looking statement. Everybody's familiar with this, so I won't get into it. But this is really the most high-profile transaction that Orefinders has done in a little bit. Outside of the Mustango thing, of course, we had Eric Sprott come in. As I mentioned, he came in for $2 million, and he gave our treasury a nice boost. We now have the ability to execute in our plans. We have the ability to execute on new plans, which I'll talk about. And it gives us flexibility in an uncertain time. And I can't stress how important that is. I can't stress how important that timing was for us to complete that just before, the unknown hit. And so here we are on the front page of the Northern Miner, getting press that cannot be bought in an industry where opinions frequently are paid for. The Northern Miner stands apart. You simply cannot buy this sort of advertising. And here we are, front page above the fold. Doesn't get any better. Eric Sprott bets on Orefinders, and that's true. He did. And he bet on our team, and he bet on our assets, I think for very good reason. And the reason why I really wanted to put this webinar together, and it dovetails with this quote here, it's a quote of me, and it says, I don't think people really understand the depths of our assets. We're a $7 million market cap. It might be more now. And we have an awful lot going on, and this is true. In fact, Orefinders has 6 significant assets. Some are properties, some are equity positions. I think all of which could be worth multiples individually of our market cap today. That's the potential I see us having. And so oftentimes people invest in us for one reason or the other, and perhaps they're not attributing fair value to the other 5. So here we are. This webinar is going to run through briefly, but also in detail, the 6 main assets that Orefinders, aside from our cash, has. So here we go. This is the agenda, in no particular order, although some order. Mustango, I'm going to talk about that. That's our equity position. We own 25% in a company called Mustango River Resources, and guess what? Mr. Sprott, Eric Sprott himself, also made a virtually identical bet on Mustango. He came in and his group for $2 million in Mustango, 2 individual financings. They happened about a day apart from each other, so they were sort of related in that sense. So Mr. Sprott bet $2 million on Mustango, and the same for Orefinders, and I'll explain why he did that. And then I'm going to talk about a MCGARRY property. I think that's very relevant because there's an awful lot of activity occurring on the project, which is next door to the MCGARRY, which is the Kerr-Addison. And we did some work as well, and we're going to come out with our exploration, our next phase of our exploration plan there. Our Night project, that is the drill program that we have in the works as advertised. That was where we went out and raised the money that we did with Eric Sprott to go to complete. Now that the money is in the bank, you will see us complete that in the near term. Number 4 is our Mirado project, which is our original flagship. A time when we were a $40 million company and we only owned the Mirado, and now we're a fraction of that $40 million, yet you can see we own 5 other assets, and that's simply a function of the junior markets and where we've been over the past 5 years. But I think things are changing on the horizon. 5th, Power Ore. We have a fairly substantial equity position and an absolutely phenomenal gold and copper camp in Quebec. And then last but certainly not least is our Pacific Precious. Again, we've got about a 30% interest in that private company, and investors can expect us to spin that off in dividend shares out directly to shareholders in Pacific Precious, which is exactly the same model we used in Power Ore, and that's going to happen in the not too distant future. All the boxes are checked. So here we go, Mistango. Why do I talk about Mistango? Okay, well, this is our property portfolio, or at least 2/3 of Orefinders' physical property portfolio. You can see we've got MCGARRY up on the east over here. We've got Mirado over here, and then we've got Omega, which is really why we went after Mistango River Resources in the first place. You can see the Omega deposit, which is again owned by Mistango River Resources, and Orefinders owns 25%. But this is about a 600,000 ounce resource. It's near surface. You can see it's on strike. This is the Cadillac break here. It's on strike to our MCGARRY. It's very strategic to Agnico Eagle, and it's good real estate. And it splits our Mirado and MCGARRY, and we've got plans for these 3 assets together. But then something happened. We came for Omega, and I think we were staying for the Eby-Baldwin. And the Eby-Baldwin, I don't want to say it was a surprise, but there was certainly a lot of uncertainty about what claims there was. And so when we took over Mistango, we realized it had some absolutely phenomenal land west of the Macassa, which is owned by Kirkland Lake, and it's one of the highest grade mines in the world here. You can see Macassa's got reserves here of almost 22 grams per ton gold. That is phenomenal. And so this is, and this is growing. They just finished the number 4 shaft. It's an operation. I think they're going to be upwards of 400,000 ounces, very high grade coming out. And as you can see, Mistango owns the entire western border, or virtually the entire western border of the Macassa. And why I think that's interesting, it's not just closeology, the geology is the same. And why I think this is particularly interesting is you can notice here, without getting too detailed here, all these dotted lines represent major faults, and we've got the amalgamated fault, which is part of the South Mine Complex, which has really rejuvenated the Kirkland Lake deposit. So that's one of these faults here. We've got the main break, which is where the vast majority of the gold in the Cadillac region has come off of. And then we've got the Kerr-Addison break, which comes and gets it from the north here. So this area here, along with some other areas up here, are really going to be the areas of focus for our Eby-Baldwin project here within Mistango. It offers the opportunity to discover another Macassa or something very similar. This whole region here has just been mined for 70 years. There's countless high-grade ore bodies that have been mined, and we believe there are quite a few left that have not been discovered. And the Mistango property, particularly the Eby-Baldwin, is just absolutely beautifully positioned there. So I think this is, again, this is a core holding for Orefinders. We own 25% of Mistango River Resources, which in and of itself is now very well financed. It's got $2 million. You're going to see Mistango come out there with drill programs on its Eby-Baldwin project, and you're also going to see it follow up on its Omega, because let's not forget why we went there. This is 600,000 ounces on the Cadillac, very strategic to Orefinders, very strategic to Agnico Eagle, even Kirkland Lake. So Mistango and Orefinders are now, I think, very much on the horizon for larger companies such as Agnico Eagle and Kirkland Lake. Not that we're a seller at these prices. This is just a zoomed in here, and I mentioned, this is why we like this property so much. This is about the confluence of breaks. We can see the Kerr-Addison, the main, the amalgamated, and the Cadillac, and they all meet right smack in our property. And something for you non-geologists like I am, but this is something that I've learned, is you want traps, okay? You want creeks, folds, kinks in the faults, and this is where the gold tends to deposit, precipitate out of solution. And so that's why when you get cross-cutting features, especially major breaks like these are here, this is where you want to be. And so we are exceptionally happy to be a significant shareholder in Mistango. I'm a personal shareholder in both significantly. And you can see that the Eby-Baldwin has historical production. I'll admit it's modest, but it's very near surface. And there are historical drill holes that confirm this. And so we have historical drill holes, which we've published in Mistango, upwards of 20 grams per ton. And this year production is 21.9 grams per ton. That is Macassa-like grades. So we know factually that grades that are comparable to that are on Macassa. In fact, they mirror the same grades, 21.9. We know that exists on the Eby-Baldwin project. We know it's near surface. I'll point out the Macassa is one of the deepest mines in the world. And so we feel we have an excellent shot at discovering something very significant here, but work needs to be done. So as I move on, this is our investment in Mustango River Resources, and I'm moving on to something that we own 100%, and this is not an equity position. This is our MCGARRY, and our MCGARRY project is located, I'm going to go backwards here, but this is where our MCGARRY project is, and it's in the gold color here, of course. We are located directly beside the Kerr-Addison, and the Kerr-Addison at one point was Canada's largest and highest grade mine. It's just down the street. If I can just sort of borrow this map here, this is our old Mustango map here, but this is the Kerr-Addison here in blue, just to the east of Orefinders MCGARRY, and this is the project I'm talking about here, MCGARRY. And so the Kerr-Addison, 11 million ounce production. It's currently owned by a company called Gold Candle. Gold Candle is private. They're based out of New York. They've been well financed. They've been doing a lot of work. It's my very clear understanding they're looking to reinterpret what was a high-grade underground mine into a bulk tonnage deposit, and I understand they've done a very good job at this. So I think in the near term, we're going to start to hear exactly what they've done. They'll come out with a resource, and I expect it to open up the region because this area is just ripe for opening up. And why is that relevant to us? Well, we think our project is geologically very similar. Okay, so there's clearly no question that we see on our mill zone the type of mineralization, particularly at surface, that is on the Kerr-Addison in this area here, extends onto our property on the mill zone, as well as the Larder Barter zone, which has seen former production in an open pit at 4 grams. Again, modest in terms of amount of tons in gold. But this is all the same geology here, same stratigraphy, same sort of mineralization. The famous green flow ore, which exists on the Kerr-Addison, exists on the MCGARRY. We did an exploration project here in September, October of 2019. We got a number of sort of grab samples here, 10 grams, 5 grams, etc. This is just surface stuff. We are going to be following up this very soon with some drilling and some more work on some new zones, particularly in and around the mill zone, which we discovered while we were out there this fall. And there's also the Arjone zone, which is quite interesting. We think it's part of the Kerr-Vit system, which is again more related to what's going on at Agnico Eagle's Upper Beaver deposit. So we love the MCGARRY. We purchased this really at a heavily discounted price in 2018. And we haven't done an awful lot of work on it up until the fall, but now that we're financed and now that I expect this area, the Kerr-Addison in particular, to become a high-profile story in the near term, expect us to invest in this property. I'll also point out something I think is very key is that we own the tailings facility in its entirety for the Kerr-Addison. So the Kerr-Addison, as described and owned by Gold Candle here, is in shaded purple. And these are the mine workings here, etc. And this is where the open pitable mineralization, will be. And here is the tailings facility that Orefinders owns in its entirety. And I think that is going to be, and we bought that knowing that, obviously. And so we think that any future development in this area is going to want this tailings facility, want if not need, because that infrastructure is just key. To do a brownfields permitting on a tailings facility is vastly easier than doing a greens field. And when you've got the infrastructure just a few hundred meters away, expect the MCGARRY to be coveted. That's how I feel about it. This is the Cadillac break, tried and trusted. We just show this here to show how deep these deposits go. You can see here we've only scratched the surface at both the Omega and the MCGARRY, etc. So moving on here, this is our Knight project. Our Knight is located just about 70 kilometers to the west of all the properties that I've been showing you in the Kirkland Lake area. I don't have a zoom out here for this particular one, but it's arguably on the Cadillac, but that's arguably, and we won't argue it here. What I can tell you is there's an awful lot of gold in the system, in the shining tree. Again, we are here in gold. We're the gold property here. This property was consolidated in 2018 or 2017 from 5 or 6 different property owners. It hosts some of the highest grade gold intersected that I've seen in a breccia pipe here on our Minto. It's got the TYRANITE, which also has phenomenal intersections. And why I think this is interesting, not only because I believe there is an economic situation to be defined here in the future. It sits on top of a 4 million ounce asset owned by Pan American Silver. It's called the Juby. As you can see, it's an open pitable type of asset. I've made no secret that I believe that these two projects here, the Juby and our Knight project, are one project that has yet to been consolidated. Whether it's us or them or somebody else, that is to be determined. I don't know how that's going to play out, but I certainly know we have an interest in the Juby. I think this has multi-million ounce potential. We clearly have the high grade portion. They certainly have a large tonnage operation here. I think the marriage of the two just makes sense. And this is where we have our drill program. So the drill program, as advertised, that we did the original financing on. And so just to run through the details on how we're going to expand this mineralization beyond the 30,000 meters of drilling that has been done. And I should note that we recompiled and re-assayed those meters, and it's going to go into our eventual 43-101 that we will publish on this property. The Knight is the only project we have that does not have a compliant resource, but we'll get there. And we're going to come out with all of that, including the 30,000 meters plus this new drilling, after we complete this future drilling. So this is just a rundown very quickly. I won't get in too much depth, but we've got 3 distinct styles of targets that we're going to be going after in this drill program. One is the Porphyry Lake. To me, that's binary. It's either a very large, it's a geophysical anomaly. It's been confirmed on 3 separate IP lines. We know it's real. We just don't know if there's gold in it, because there's never been gold, never been a drill hole tested on this project. If it does come back with good mineralization, expect us to ramp up drilling on that very quickly. The second is the TYRANITE mine. We've got a new interpretation of that. And the third is where we believe we've identified more breccia pipes on the Minto. And I'll run through those quickly. So this is what the Porphyry Lake target looks like. It's represented there by the red star. As I said, there's been absolutely no, and it's roughly this, it's quite sizable. It's about 300 by 250 meters that we can tell. We see it's near surface, but we just don't know if there's gold in it. We know there's gold all over the place here. There's all sorts of drill holes here, which you can see we represent here. There's the Minto here, which is where we have those eye-popping drill intersections. We got the TYRANITE mine up here and the Dugan open pit area up here. So there's plenty of gold in the system. There's this very large anomaly. We're going to poke 1 or 2 holes in it, and we'll know if it's real or if it's not. It's very simple. The second type is the TYRANITE. To me, this is one of the more interesting drill targets we have. In fact, maybe my secret favorite. This is the TYRANITE. It's quite simply, it was a high grade. It is a high grade shear zone hosted deposit, quartz associated gold. We know very clearly if we drill below the existing infrastructure, the shaft here in between, call it these green and purple zones, we know the gold is going to carry. We know we're going to hit more mineralization there. What we're doing here on this drill program is testing a new theory, and that has to do with the contacts of the ultramafics. And so what that means, quite simply, is that wherever this purple area is, which is we represent as the ultramafics, wherever that touches a new type of rock, whether it's mafic or the porphyry style mineralization, that's where we're going to drill. And so this is a real new interpretation of trying to find an ore body that they weren't really looking for, or style that they weren't looking for. So that's kind of exciting. If we can turn this on its head and not only drill the existing type of known mineralization, but find something new, which is sort of what they did in Red Lake, 20 years ago, which made Goldcorp quite famous. That's the same sort of premise that we're going after here. We'll see what happens, but we certainly think it's worth the risk and worth the investment. So more on that later. And then the last style of mineralization we're going after is very simple. It's our breccia pipe targets where we got again, these super high grade areas here. We drilled 18 meters over 65, 16 meters over 30, 13 grams over 82. Now these are in small tonnage breccia pipes. We always describe them as carrots in the ground. So when you find one, it's hard to make an economic deposit, but if you can find multiple that are proximate to each other, that really changes the dynamics, especially when you have grades like that. And so we believe, we know we've found, again, magnetic and geophysical anomalies which have a very similar signature, as well as grab samples at surface. So this is the Minto. These are where the green here, these are where all these grades come from. This is the original carrot. We believe we found a bunch of other ones. We have to drill test it. They haven't been drill tested, but if they come back with gold mineralization, then we think long story short, we think we're in business in terms of the breccia pipes. We'll have multiple breccia pipes, and that changes the economics. So that's a very brief high-level description of our night project. And now I'm going to move on to our Mirado. I haven't talked about our Mirado a lot very recently, and some people say I forgot about it, and I say that's absolutely not true. The Mirado was our firstborn. And it's maybe one of our favorites. We think there's a huge amount of potential there, but it needs more work. We did originally, so when Orefinders went public back in 2013, we drilled out nearly a 500,000 ounce resource on it. And since then, we upgraded that or modified its view by doing a PEA on it. You can see here we list the PEA numbers, which are much more modest in terms of ounces, but much higher. This PEA represents really a starter pit. Based on a larger pit, and that was at the time us thinking, okay, well, let's generate some cash flow. We did a bulk sample. We sent 25,000 tons, and I believe we got about 1,414 ounces back payable. We made a little bit of money. It was a proof of concept. It gave us excellent metallurgical data, and it just it revived the company, to be very honest with you, and it gave us a lot better understanding. We certainly think this has multi-million ounce potential. I'll point out, before I go to the next slide, I'll point out, this is our property here. As I said, we've got two resources on it. The maiden one, which is sort of a larger concept, which has about 442,000 ounces at about 1.3 grams per ton. And then we did a starter pit project in the PEA. I'll note that there's a project here called North Star Gold. They're in the purple. Good asset, good people. Their market cap, this is really their only asset. Their market cap is $10 million. Our market cap is $10 million, yet this is one of 6 assets, and that's just the way the market is sometimes. But, I probably think these projects belong together. I am a believer in consolidation in the mining industry. Bigger is often better, but not always. But often in the exploration side of the business. So this is our Mirado project. It on its own clearly warrants our market cap with some exploration and further development. Who knows what it can be worth. This is our 3D interpretation of the South Zone ore body, and the South Zone represents where that maiden resource was. This is the open pit. This is area here where you can see here, and I'm going outside of the pit. This is what we call the North Zone, and this was actually a separate mine back in the day. You can see in the green represents it's working. It was a gold rich, but also had VMS characteristics with copper and zinc in it, so it was a polymetallic situation. This old mine here really hasn't seen a lot of activity, not by us and not by anyone else in the last 40 plus years. So our Mirado project, it's a fantastic project. It stands on its own. It's in a sense been overlooked because we haven't paid too much attention to it to 2016 when we did that bulk sample, but I assure you there's a lot of interest in it, and I assure you it's very much in our plans. It has a lot of value. Okay, the last 2 things, and certainly not least 2 most important things, but I'm going to talk about Power Ore. And why I talk about Power Ore is because Orefinders owns about 10% of this company. It was born out of a spinoff of Orefinders, where Orefinders shareholders received directly on a 1-for-17 basis shares in Power Ore. And this is what Power Ore, for all intents and purposes, controls. We call this the Opemiska Copper Mine Complex. And up until about March 1st of 2020, Power Ore owned the Springer and the Perry right here. And so this isn't necessarily denoted properly on this particular map, But as I'm outlining here, this is what we owned, the Springer and the Perry. These two mines together pulled 1.4 billion pounds of copper and 1 million ounces of gold over 50 years. This was the most important copper gold deposit in Eastern Canada. It was operated by Falconbridge. The idea behind this project was to take, very similar to the Malarctic, to take what once was a high-grade underground vein system and look at a bulk tonnage potential. We had the theory, I believe, in fact, no, we proved it. In our drill program in the summer of 2019, we drilled 13 holes over 100 meters with very good copper and gold mineralization. We had some absolutely eye-popping intersections, some of the best copper intersections I've seen in Canada on this project, but to little fanfare, to be very honest with you, and especially now that copper is not all that popular. But so that's what we have. When I say we, I mean Power Ore and Orefinders 10% ownership of it. It has the Springer and Perry. It's going to continue infill drilling to define and come out with a PEA, economics and engineering on the open pit on the Perry. Now, as of March 1st or thereabouts, it announced that it acquired this land package in its entirety. Okay, so it had about 800 hectares, and this area here, which is a relatively small footprint, now it's got nearly 10,000, and it's become a district scale exploration play. In addition to this land, and I'll talk about this land, we acquired the Robitaille and the Cook. The Robitaille is analogous to the Springer and the Perry. It was once part of the Falconbridge operation. These 4 mines were all collectively operated by Falconbridge. These are all copper rich with very nice gold credits. And the Cook on the other side of the Gwillim Fault was quite a producer, operated until the 90s, except this one produced, it was gold rich. So instead of copper rich, it was getting 5 grams per ton gold out of the Cook. So there's a gold element to Power Ore and the Opimiska concept here. So we just optioned these properties. We think that the Cook has phenomenal potential. And as do we think this land package has phenomenal potential. So it's the Gwillim Fault here, which I'll point out, which is the controlling regional structure. It's a major structure. You'll see this runs right into Chibougamau. Right here is another fairly substantial deposit called the Scott Lake. And so this whole trend here going all the way up into Chibougamau, which is about 10, 15 kilometers to the northeast, is again, I think, the most important copper/copper gold district in Eastern Canada, bar none. And we control now 12 kilometers of the Gwillim Fault. There is been substantial drilling on this new land package that we acquired. We think, again, we like new interpretations because that's how you need to look at these types of, that's how you'll have to approach exploration, is take advantage of the work that's been done and come up with new ideas and then drill test them. And that's what we're going to do on, I'll call it the blue sky. So let's say outside of understanding what mineralization is left here, and if there's new ore bodies to be discovered here, we're really all about following up on targets that have been drilled here and then following up on those, but coming up with a different idea. And one of those is, quite simply, is how the veins are oriented in a sort of east-west or north-south fashion. We noticed very quickly that the orientation of the veins on the Springer and Perry varied. Okay, so typically, the mineralization runs in a particular dominant direction. However, this isn't the case in this area, and so a lot of the drill holes, original targets that were drilled all along this fault, hit on the first interpretation. But then when they went to go step out, meaning they stepped out 100 meters to see if they connect the 2 zones, they missed. And so why did they miss is the question. And we think it could be, and I won't say something as simple, but we think that the potential answer could be with the orientation, the directional orientation of the veins. So if they were skewed a little bit, then you could miss them with your drill on your follow-up. And so we're going to go and retest a lot of these targets. And so there's, not only do we have massive potential on the most important copper gold mine complex in Eastern Canada, we've got blue sky here. So I think that changes the dynamics of Power Ore. And as I mentioned, eye-popping intersections. These are our own holes, 2.5% copper equivalent over 74 meters, starting right from 28 meters. phenomenal. 1% copper equivalent over 162 meters. That is very, very long. That is disseminated. And look where it starts, at 3 meters. I'll remind everybody, this whole project has rail, power, road, right to surface. 1% copper in an open pit is economic in most places in the world, especially when it's at 3 meters. When you are in Quebec and you have access to infrastructure that is already in place, that just enhances your grade substantially. So you don't have to write billion-dollar checks on day one in order to mine this thing. You can do it a lot cheaper and a lot faster because this infrastructure is there. 1% copper in an open pit on the rail in Quebec. If we can get enough tons, and I think we will, then we think that's a mine. And this is what brought us to this mine. When you see 17% copper plus a nice 1.7 gram per ton gold sweetener over 3 meters right at surface, you don't see that very often. And you don't see it very often in the middle of Quebec. And so these veins are still there. And that's the beauty of a former underground mine. There's the crown pillar. We're going to get these high-grade sweeteners early on in the payback. And there's an awful lot of it because the crown pillar was up to between 50 and 70 meters, depending on where you are. So there's an awful lot of not only just disseminated material outside of these veins, there's these sweeteners within. And so last, our sixth, call it asset. It's certainly not least, it's Pacific Precious. And Pacific Precious, we signed this deal a year ago. PDAC 2019, we announced this deal. Pacific Precious is a private company. I am a significant shareholder, full disclosure, but because I believe in it, as I'm a significant shareholder in every single company that I just discussed. This is no exception. Obviously, this is in PNG. This is outside of the scope of what Orefinders would consider to be a core asset. That's why we kept it as something that's going to be spun out. PNG is a completely different situation in terms of not only geology, but social, understanding the social and how to operate there. And it carries its own risks. I would, without question, say these risks are elevated relative to the Abitibi, which is the best place in the world to do business. But the reason you go to a place like Papua New Guinea is because, not to be cliche, but you're looking for elephant deposits on this map here. And in this trend, they call it the New Guinea Mobile Belt. You've got Ertsberg, Grasberg, that's 100 million ounces. You've got well, here's just out of the belt, but that's 50 million ounces. We've got Porgera, Frida River, OK Teddy. And then, of course, you've got K92, which has just been hitting it out of the park. They're not too far away. And so we are in one of the richest, if not the richest, gold belts. These are where the golden elephants are. And so that's why we're there. We took this extra marginal risk. And when I say we, I mean the company Pacific Precious and Orefinders as a 30% shareholder. We took that risk because we have shareholders and directors who are local PNG geologists. Our key geologist, Charles Beaudry, worked on Frida River and lived there for 2 years. So he knows the rocks. He has a good handle on the social and the government operations. And so this is, and why I'm going to talk about this, not just because it's one of our 6 assets. We are going to be spinning this company off. So Orefinders owns 10 million shares in its treasury. It will take approximately 5 million of those shares. It will dividend them out directly to Orefinders shareholders. So if you are an Orefinders shareholder in the near term, you will get directly into your account automatically shares in Pacific Precious. It's the mechanism we use with Power Ore. It was quite successful. It's effectively a junior giving a dividend. It's got a no tax consequence to you. That's if you're a Canadian shareholder. I can't speak for shareholders in Mexico or whatnot, but certainly as a Canadian, it comes out as a zero cost base and hence zero tax effect, which is a major bonus. And then the company is going to be doing a $2 million raise in the near term. We were marketing that, but pulled back on it because of the COVID situation, but expect a window to open up. And when it does, we will finance this and go with the drill program. We've got some pretty eye-popping intersections there, nearly an ounce over a meter right at surface. We got a 7-ounce grab sample, which got my attention and why I initially invested and got Orefinders involved in it as well. And so expect that to happen in the near term. The 43-101 report has been completed, has been approved by the exchange, and as is the valuation. And so all systems are go for this. It's really just waiting for that window to finance. And when that window is open, we will spin it off and our shareholders will get a dividend. And so that's it. That's the story of Orefinders circa April 2020. Lots going on. Mr. Sprott's bet on us. He's bet on our sister company, Mustango. And he's bet on all of our assets in our team. And I couldn't be more proud of the company we've put together. It all comes back to our team, which is a team is something I've learned through the Mustango situation is the most important thing in this industry. And I think we've got a great team. We're well financed. We've got great assets. And I'm certainly optimistic on the macro prospects of the gold environment. So my name is Stephen Stewart. I'm the Chief Executive Officer of Orefinders, and I always get back to my shareholders. So if you have any questions, they're on my email and my telephone. I appreciate your time, and I look forward to hearing from each of you. Thank you.